Hello and welcome to traders and investors. I'm glad to present to you the cryptocurrency market review presented by analysts and experts from fx.co portal. Here we go. Bitcoin and Ethereum are continuing another sharp sell-off, dragging the entire cryptocurrency market lower. Over just 4 months, Bitcoin has lost nearly 40% or around 50,000 USD of its value. Against the backdrop of a weakening US dollar, rising global uncertainty and increasing geopolitical tensions, investors are shifting toward more established and perceived safe haven assets, such as gold, silver, and equities. Moves like these serve as a clear reminder of two fundamental realities. First, Bitcoin is not a physical store of value. Second, no bullish trend can last forever. In the past, Bitcoin's uptrends have ended with drawdowns of 70–80%, which makes the current decline a natural and predictable development. At the same time, some experts are beginning to sound the alarm, although there are still voices claiming that Bitcoin is on the verge of an explosive rally in the very near future. There was once a popular narrative suggesting that Bitcoin should rise when the US dollar weakens, acting as a hedge against inflation. The current market environment has clearly shown that this theory does not hold up in practice. On the daily time frame, Bitcoin continues to form a sustained downtrend. Market structure remains bearish, with the CHOCH level currently located at 107,300 USD. Only a decisive move above this level would signal the end of the bearish trend. Bitcoin has shown a clear and strong reaction to the bearish fair value gap. A sell signal was formed. Continuation and confirmation followed, and the decline is now underway. The next downside target for this bearish leg is 70,800 USD, which is now relatively close. The previously identified bullish FVG has flipped into a bearish IFVG. The zone now acts as a new key point of interest, where heightened market activity is expected as a part of continuation of the downtrend. On the 4-hour time frame, price continues to develop a new bearish structure. The CHOCH level is now located at 90,560 USD. And only move above this level would allow for a discussion for potential trend shift to the upside. At this stage, however, there are no signs that Bitcoin is ready to complete its decline. During the latest sell-off, 2 new bearish FVGs were formed. So far, Bitcoin has not corrected into either of these zones, reinforcing the strength of the current bearish momentum. Ethereum has declined for the 5th consecutive day. Price has moved well below the trend line, which also acted as a key liquidity pool. The 2,400 USD level has been reached, a target we identified in our previous review on January 30. The only drawback was the lack of clear sell signals ahead of the drop. In recent weeks, not a single bullish pattern has formed. There were no buy-side liquidity sweeps, and none of the bearish patterns were invalidated. In other words, there were no technical reasons for upside. Since August 2025, Ethereum has lost 56% of its value. And this is likely not the end of the move. On the daily time frame, Ethereum continues to develop a sustained downtrend. At the start of the latest sell-off, no direct sell signals were formed on Ethereum itself. However, a valid signal appeared on Bitcoin, which could also be used as a reference for Ethereum. At present, two bearish FVGs remain active on the daily chart. These zones may serve as areas for considering new short positions in the future. The CHOCH level is located at 3,395 USD, marking the most recent lower high. As long as the price remains below this level, the bearish trend remains intact. On the 4-hour time frame, Ethereum continues to its sharp and aggressive sell-off. During the latest leg lower, two numerous bearish FVGs were formed. Technically, the second of these FVGs was filled just before the decline resumed. Traders are often used to seeing clearer and more obvious signals, but not all market conditions provide textbook setups. In the current environment, while the entire market under heavy pressure, and this type of signal is sufficient to justify continued downside expectations. That's all for today. See you online soon, and good luck.